What are the top 3 scams that exist in Forex and how to spot them? Hi and welcome back to Trading Strategy Testing channel, where we learn and test your trading strategies. So far we have tested many trading strategies and indicators, including Bollinger Bands, MACD market structure, RSI stochastic, moving average crossover strategy, and more. If this is your first time here, consider subscribing to the channel to enjoy every piece of content that we make to help beginners become full-time traders. When I started trading Forex a few years back, the industry was extremely sophisticated for the public and it was rare to see full-time traders. Forex was not as popular as it is today, as access to this market was restricted and required certain conditions. Plus, the brokers were not running the dynamic platforms we see today. In the last 5 years, Forex gained important attraction as the idea of working independently started to emerge. Trading Forex for a living was some sort of lifestyle that many people dreamed of. I encountered various scams throughout my life as a full-time trader and met plenty of people who lost their life savings to a business that they didn't know enough about before diving into it. In this video, I would like to share with you 3 popular scams that some people fall into when starting their journey as traders. I won't be able to cover all the scams out there in one video, so I will probably make it a series that aims to expose the different scammers in this industry. 3. Robot scams. A Forex robot or expert advisor is an automatic trading program that relies on algorithms, or lines of computer code along with external data. The robot acts exactly as a normal trader, by analyzing the market and making trades according to a predefined setup. Not all Forex robots are scams, obviously. For example, Forex robots can be built using expert advisors to run perfectly on popular trading software and terminals such as MetaTrader. The challenge behind the usage of Forex robots is their inability to interpret the fundamental news, and usually perform poorly if there are issues related to the internet or server connectivity. On top of that, most of the robots are vulnerable to the non-trending market conditions. There are plenty of robots that generate profit on a regular basis and could save you your time and resources, especially if you run it on a virtual server. If you decide to use it, make sure you backtest it before running it. Let me know in the comment section if you want me to make a video on how to backtest a robot or even test one of your choice. Before you do so, just think about it. If a robot works as advertised, how come banks and major hedge funds don't use it, and what motivates the seller to sell it to you rather than keep it as a secret holy grail? 2. Signal sellers. You can notice from time to time some comments on this channel made by scammers who use softwares such as Jarvey to keep on scamming YouTube content with tons of unrealistic ads and promises. Most of the signal sellers use Instagram to show you pictures of themselves living the life that all of us dream of. It's part of their strategy to have a visual interpretation and social proof to increase their credibility. Most of the signal sellers advise their students or Telegram group members to have their accounts opened in one particular broker, as they will also make money from the affiliate commissions. Some brokers out there pay up to $25 to the referrer for every standard lot that the referee trades. They also encourage their students to trade high volumes in order to boost up their commissions. The sad thing is that some regulated brokers offer this opportunity to social media influencers and even go to the extent of manipulating their accounts to allow them to make some motivational visuals for the aim of attracting more victims. Regarding the signals, they usually dropship them from other brokers, as it's also important for them that the victim remains in the market as long as possible to act as a service advocate. Let me know if you want me to make another video exposing more of their techniques, and kindly give this video a thumbs up to encourage us to make more educational content for you. 1. Phone portfolio managers. There are many ads nowadays all over the place promoting phony Forex trading investment scams and fake Forex investment funds. The idea is to get a fund from the victim and keep on sending him or her a small amount of so-called profit on a regular basis to motivate the victim to invest more money. Their main slogan is, "Send us your investment and you can sit back and enjoy the returns." The company usually runs a Ponzi scheme where they continue to pay the new joiners and come up with a reason to hold the funds of the victims who decide to invest important amounts. These companies usually run a white-labeled irregulated platform that they host, usually in countries with questionable monetary regulations. The platforms are programmed in advance to make the victims make profit and then manipulate the spread and cause regular slippage to blow up their accounts as soon as the trader decides to up the game and deposit more cash. These brokers are labeled as market makers. Some people would rather use an ECN broker that might be using other methods to scam the traders. Some of these companies are popular and quite famous in the Forex industry. Let's give this video a thumbs up to encourage us to make a video on how to spot these brokers and get out of the scam as soon as possible. Let us know what you want us to cover in the second part of the video. And feel free to check out our channel to learn more about trading and to explore the various strategies we have been testing recently. Happy trading!